So I welcome you all to the second day for Game Changer webinar session. And yesterday we were doing a practice set 1. And I did tell you that not all the exam attempts which are available on Study Hub will have to be done by you because they are outdated attempts. The questions and their relevant answers are shown according to the previous Finance Act. So there were only in total 4 exam attempts which you may practice on the Study Hub, out of which one is pre-June 2026 mock exam. Okay, before that, I start with the same practice set because we did not complete it yesterday. I shall be taking you to few more points which you really need to understand before starting with the practice for today's session. Is my voice clear? All right, do update me if in case you fall, if in case you cannot be able to understand clearly. Okay, so generally speaking, why usually students fail? This is the first thing that I need to discuss before heading on towards our practice set. As these are those things which I kept on discussing in last day's session as well, but I'm just going to summarize it over here. If in case you are not able to get with your exam completely, if you not complete your entire exam, then this is going to be the biggest reason for majority of the students of not passing the exam. So what is basically the criteria of handling this situation? Number 1, you must have practiced well. Practice is basically a key to success. So if in case you have done practice very well, you must have gone through at least 25 to 30 questions of your Kaplan revision kit. And by the way, as what I promised with you people yesterday, that I'll be sharing the list of important questions out of the Kaplan revision kit with you people by the time today's session will be concluded. Though this list has already been shared with my enrolled students in the previous week. Okay, so practice of 25 to 30 questions is must. And doing the practice on the CBE portal is going to give you an added advantage. So you do not have an access to many exam attempts, many exam questions, but what you may do, you can select a certain question out of your kit and doing its solution on the spreadsheet. This is like exactly giving you the same environment on how to like prepare yourself doing the questions on the spreadsheet and the Word document, right? And then doing the mock will actually save you from getting surprises on the exam day. I mean, if you have taken the mock exam and if it is like gonna be taken up exactly in the same exam simulation, 3 hours and 15 minutes on the CBE portal, then you will understand so many things and how the questions to be accessed, how you may see the exhibits, which things have to be kept in the mind. If your approach is clear, then believe me, on the day of exam, things are not going to bug you a lot, right? So first of all, the practice should be done, the mock practice should be done so that you really have a clear-cut knowledge of how things are going to be accessed. And of course, this is like going to give you an added advantage of having a feedback before entering into the exam center, that what is exactly the level of your exam. I mean, if in case you have already planned that you'll be doing section B questions first, then of course your approach is like clear, and out of the section B question, you may have a broad look that maybe you have a very good grip on CGT aspect. And if you find that there is like question number 3, which is like revolving around mainly around the capital gains tax rules, then you will pick up that question first and you will start doing the question. By the way, with computer-based exam, you can even do multiple experiments, as in if someone of you would be making a plan that he'll go in a normal way. I mean, he'll start with section A question first. Okay, you start with section A question. The requirement A seems to be fine to you people. Okay, you do requirement A solution, then you find requirement B to be like precisely accurate. Okay, you got done with requirement B, and then if in case you find that requirement C is a little tough, then leave the tough question at a side. You may leave space on your Word document on your spreadsheet, and you may go to the next question, which is like still looking easier to people. So start solving as many easier questions first, and then later on, when you will definitely be having some time left, then start dealing with the tough questions. If you just keep on like handling the tough questions alongside the simple questions simultaneously, then you keep on like spending a lot of time in thinking, writing, cutting. I mean, you will be like spending a lot of time in like fighting with question, which is like giving a tough time. If you just take a approach of starting with the easier question first and doing the easier question would actually be saving first, then technically, for instance, if there's a question which could have otherwise been done in 10 minutes, but just being, but just because of the fact it's a tough question, you might end up spending 25 minutes on that question. And this is like going to be a very drastic thing because it is not just going to impair your performance for that particular requirement because you are not sure about that requirement, but it is like actually eating up the time for the remaining questions as well. And this is how you will be like coming under the time pressure. You'll be feeling a time constraint, and that's how you will mess up with your exam. So start with the easier question first and doing the practice before entering into the exam. And this is how you'll be able to complete your entire paper on time. Then, of course, before entering into the exam, your preparation should be up to the mark. You should not be like leaving any topic untouched. But yes, being a student, I can understand there must be like some topics for which you must prepare very well, but there must be like few topics in the whole syllabus for which you haven't done the practice perfectly. But it's like you should have covered each and every point of your syllabus. I mean, 100% preparation should be done, though I know that your grip on certain things must be not good, while on others must be like too good. So the thing is, if you are not going to leave anything behind, then you will be able to complete all the topics. So for instance, if there is a chapter for which your preparation is not good, but at least you have gone through the entire chapter, the whole like rules associated with that chapter, then if a question relevant to that comes in your exam, you will be having something in your mind to write over there instead of leaving it totally blank. And then whenever you have a descriptive question, and you must have noticed that in majority of the places, you will have to write a lot when it comes to advanced taxation exam, then the sufficient coding should be done. That would mean this is something which I told you people before that, for instance, if there is a descriptive question of worth 6 marks, then you really need to produce at least 6 valid points, right? So if for a question of worth 6 marks, if you produce only 4 points, then this would mean that you have not been able to produce sufficient points with respect to the marks associated with the requirement. So insufficient scoring basically is something which may lead to certain disaster. This is like something which I've already covered, that students who do not practice on CBE platform, they usually get surprises on the day of exam. So doing practice on the CBA portal is like going to save you from multiple things which might be shocking if you are going to attempt your questions for the very first time on the portal live when you're taking your exam. And then you really need to be confident about the formats, the way you are going to present a certain answer. I mean, when it comes to CGT, when it comes to IHT, of course, their presentation styles are a little bit different. So when you are so clear about the formats, the way the things are to be executed, then this is like actually going to be creating a good impression on the mind of your examiner. That's how you will not be failing your exam. And this grip on the format could only be made if sufficient level of practice is done before going to exam center, right? Is this thing clear to each and every one of you? All right. Now I'm just going to take you to the same exam which we were discussing yesterday. As we had started off with section A, and as I told you people before, that whatever the number of exhibits you receive in your question number 1, the last exhibit shall be containing the requirements. And we got done with requirement A, B, C, and E. But requirement D was still left. And for the sake of requirement D, we need to go through exhibit 4 once again. So I'm just going to open exhibit 4 for you people. Just go through this exhibit. I mean, just relearn that what you have read about this question, and then we'll discuss this question. All right. So this is the information related to exhibit 4. Are you all done with the whole content? All right. Now I'm just going to take you to the last exhibit as section A question. Section A contains only one question, and which is of worth 50 marks. And within the body of the question, you will find the requirements in the last exhibit. Okay, so with respect to requirement D, for which you have just gone through exhibit 4, it says that given that core is taken to maximize the company's trading loss for the year ending 31st March 2028, explain, highlight the verb so that in the end, I will not forget that how many tasks I was supposed to perform. Okay, so I'm just going to Okay, so I will be explaining whether you agree with the advice given by his friends concerning the tax treatment of the proposed purchase of Cloak brand and intangible fixed assets for worth £35,000. And then in the same requirement, we need to explain again the second verb, the action word on which we need to act, the tax relief which will be available to Cord Limited in respect of the scientific research cost of £74,500 to be incurred in the year ending 31st March 2028. And then we need to calculate. We need to calculate the amended budgeted tax adjusted trading loss for Cord Limited for the year ending 31st March 2028, taking into account the explanations requested above. So we'll have to link with the explanation that we have made, and according to that, the calculation will be done. And then we need to explain how much of the Cord Limited's amended budgeted trading loss will be available for use by Porth Limited. So many things are to be done as far as this requirement is concerned. I have highlighted all the verbs. Instead of like highlighting, I could have kept these things in my mind as well, but it's just that I will have to address all the issues which have been requested in the requirement, because one requirement does contain a lot of demands. So if you skip any of the demand which is being made by the examiner, of course you will not be able to score all marks. Altogether, this requirement is for 12 marks. Okay, so first thing first, I shall be dealing with the fact that whether do we agree with the advice given by his friend concerning tax treatment of the proposed purchase of Cloak brand as an intangible asset of £35,000. And I'm just going to open again this exhibit 4. Why? Because this whole information could be found in exhibit 4. The best part of such questions is, I mean, section A question is that they identify you that where you can find the relevant information. All right. So see, by looking at the information given, Core's friend is
whether like he is correct about this thing or not, as the brand is being acquired for £35,000 and it is having a useful life of 35 years. So if I talk about the accounting treatment of this amortization in respect of this brand, it is like going to be £35,000 being the cost divided over 35, which is like the total number of years. So per year expense is of £1,000, which has already been deducted against the accounting profits. And he as he has deducted this £1,000, his friend is of the opinion that this amount is fully deductible. Well, his friend is correct in saying this thing that £1,000 charged to profit and loss account in respect of this expenditure is allowable for the sake of calculating taxable total profits. But the alternative treatment is going to even let him have a more deductible value, as alternatively, the companies can claim a tax relief of 4% over the cost of the intangible asset, which is to be like taken in the form of a relief on a straight line basis. So let's see that what would this value be. I'm just going to open word processing document. Why? Because of course I shall have to give the explanations over here. And what I've already told you people before, that while you are going to answer any question, it is must that you'll be giving the headings. So what will I do? I, for the sake of like saving the time, I am going to copy the heading and will be converting it into, I'm just going to copy the requirement and going to turn it to the heading. So this is how I have selected the lines, and now I am going to paste it over here. So it's like explanation, whether the advice given by his friend concerning tax treatment of proposed purchase of cloak brand for £35,000 is correct or not. So this is how we have, instead of like typing the whole line and like consuming a lot of time, we have shifted the requirement into heading. And what will I say that chorus friend is correct in saying that the amount of £1,000 charged to profit and loss account is fully deductible. And we know that in case of companies, whenever they are having an intangible non-current assets, they may go for an alternate treatment as well. So alternatively, instead of what has been charged in the accounts, 4% relief on straight line basis can also be claimed, which is, could you please tell me what actually makes up 4% of 35,000 pounds? 4% is the rate on which tax relief is available to companies in respect of intangible asset. That's of 1,400 pounds. And this is like clearly much beneficial for him. So alternatively, 4%, not the 5%, 4% relief on straight line basis can also be claimed, which is 1,400 pound. And it is clearly beneficial instead of actual amortization expense. So if Corey was thinking that he is not able to deduct 1,000 pounds, no, he is. Uh, I mean, he was like confusing the thing. His friend is correct that he may deduct 1,000 pound totally, and if he goes for the tax treatment on an alternate basis, then he can even deduct 400 more. Now, what else was mentioned in the requirement? We had to first discuss that whether we agree with the friend advice or not. And then this is like done. And now we are going to explain the tax relief which will be available to Cord Limited in respect of the scientific research cost of 74,500 pounds. Again, I'm going to open this Exhibit 4. So when it comes to the loss, which includes a deduction of the whole of the cost attributable to a scientific research project. It does include the material cost of 21,000 pounds, the rental expense of 17,400 pounds, electricity and water is costing 6,600 pounds, while staff cost is of 29,500 pounds, and that's how it makes up 74,500 pounds. See, the tax relief will be available under the Research and Development Expenditure RDEC scheme, and it is deductible against trading profits, but an amount equal to 20% of the qualifying expenditure. See, mark my words, 20% of the qualifying, not all expense, the qualifying expense will be given a special treatment under this RDEC scheme. And what's that going to be? The 20% of the qualifying research and development costs will first be added as an income in the trading profit figure, and then the second treatment will be a tax credit of an amount equivalent to that figure will be given, and it is going to get deducted against your tax liability, against the corporation tax liability. So can you see that Quad Limited is a loss making and they have no corporation tax liability at all? So tax credit is not something which is like going to convert the profit into the loss, as it is like already in a loss making position. So the tax credit can be carried forward to get adjusted against company's future corporation tax liability. Or if you want to, this amount can be reclaimed from HMRC. I mean, we may ask HMRC to repay the amount which is like equivalent to the tax relief figure. Let me just write it down as well simultaneously. So again, as it requires an explanation, so for explanation, one will always be picking up the Word document, research and development expenditure. See, this is the other heading that I have made. Why? Because the first heading that I put up over here, that was like related to only the cloak brand. This was like related to intangible assets amortization expense, but it is like going to be different. So I think a different heading shall have to be made. So tax treatment for research and development expenditure will be available under RDEC scheme tax relief is provided by first adding 20% of the qualifying expense into trading profits figure and then deducting the same amount, which is called as tax credit, and hence reducing corporation tax liability, right? And then I told you that the company is already making a loss as Quad Limited is already having a loss. So tax credit can either be carried forward, not to reduce current accounting period's tax liability, though there is like no tax liability. In fact, there's a loss, so loss will be increased because of like deducting this thing. So either the future corporation tax liability will be reduced, or what we may do, we may ask for a repayment of the tax, which is like equivalent to tax relief figure from HMRC. Right? Okay. So now we have to identify that which cost, as far as this table is concerned, which of the cost is like qualifying to get special treatment under RDEC scheme, though the total cost is like once deductible as a trading expense, but then the special treatment under RDEC scheme is like applicable only over the qualifying cost, out of which I must say that rental cost is not a qualifying research and development expense. And when it comes to this 7,000 pound, I mean, the amount being paid to external contractors, only 65% of the amount paid to external contractors will qualify for RDEC special treatment. So out of this whole expense which has been incurred in terms of research and development expenditure, the rental expense is not a qualifying expense. And when it comes to the staff cost, for which 7,000 pound has been done, only 65% of the expense is relevant, and this external contractual cost is like already included as a part of staff cost. So only 35% of the relevant expense is not considered to be relevant as a part of qualifying expense. So we will have to remove 35% of this expense, right? So what will we write over here? That rental cost is not a qualifying expense for tax relief under RDEC scheme, and only 65% of external contractor cost is qualifying, which means the remaining 35% is not qualifying. So what the qualifying cost will be, it's like the total expense that we have done is 74,500, against which the rental expense is not qualifying. So I'm just going to remove it. 74,500 less 17,500, and staff cost does include an external contractor cost of 7,000. But for RDEC scheme, only 65% could be deducted, while the remaining 35% shall have to be removed. It is not allowable. Can you please tell me what actually makes up 35% of 7,000 pounds? What makes up 35% of 75,000 pounds? Sorry, 7,000 pounds. 2450. Thank you so much. So 2450 is not to be treated as a part of qualifying cost. So I'm removing it. So what the qualifying cost is, that will be like as per rule, when it comes to research and development expenses, rental expense is not, though rental expense is deductible for once. It is a revenue expense, it is deductible. But for a special scheme, government has strictly said that rental cost is not to be taken into account. Okay, so the amount which is like qualifying for relief is of 54650. Is that so? Thank you. 54650. See, this question is like containing a little bit of the calculation. So for the sake of handling a little bit of the calculation, there is no need to go to the spreadsheet. It could be handled over here on the Word document. But when you find that the margin of the calculation is overwhelming, then it is preferred that spreadsheet shall have to be used. Okay, so what is like going to be RDEC relief? So it's like 54650. It's being claimed at the rate of 20%. So 20% of this qualifying cost will turn out to be 10,930 pounds. So this is basically the cost which is first added into the trading profit figure, and then later on it is going to act like a tax credit to reduce the corporation tax liability. But this is like something I've already told you, that this can either be reducing the future tax liability or it can be claimed from HMRC as a repayment of tax figure. But now, according to the requirement, let's focus on one more thing. They said that what is the amended budgeted tax trading loss for Quad Limited for the year ending 31st March 28, taking into account the explanations requested above. So whatever the treatment we find feasible for Cloak brand and for this research and development, what is going to be an amended, the changed figure for trading loss, as according to this question, what exactly the trading loss figure for Quad Limited is? This in Exhibit 4, the trading loss figure, the budgeted trading loss figure for the year ending 31st March 28 is of 44,000 pound. So that's basically the loss figure. Okay, as I'm now heading towards another thing, so I think I shall put another heading, amended tax adjusted trading loss, right? All right. So what the budgeted trading loss figure for Quad Limited for the year ending 31st of March 2028 will be, that's going to be of 44,000 pound. I'm just going to show it within the brackets to show it's a negative figure. And if I talk about the amortization of cloak brand. See, I must tell you that according to what mentioned in the exhibit, the accounting amortization figure of £1,000 has already been deducted. It has already been deducted while arriving at this figure. But we must consider that the tax treatment is more feasible. And what the tax treatment was, it was of £1,400. 1,000 has already been deducted, but the feasible treatment was of 1,400. So just suggest me, what do you think? Shall I be deducting 1,400 or I will have to deduct now £400? What's your opinion? Yes, it's off. Though he wants to maximize his loss, but now genuinely what is left? This is just 400. He is allowed to deduct £1,400. 1,000 has already been adjusted, but he may have 400 more, right? So, or in other words, you may say that accounting treatment is disapplied, 1,000 is reversed, and 1,400 is deducted. But at the end of the day, we would say that 400 is additionally deductible. So, 400 is something which we will be deducting. And then with RDEC relief, first of all, what do we need to do? That 20% of this amount shall have to be added into the trading profit figure as a part of their taxable income. So that is going to be of £10,930. Okay, so according to what we have done, what is like going to be the tax adjusted trading loss? That's going to be of minus 44,000 minus 400 plus 10,930. That makes up 33,900, 33,470 pounds. But still, it's a negative figure. It's representing loss, right? So this is now the tax adjusted trading loss figure. Though this amount of 10,930 will be reducing our tax liability, but this is like something which I've already told that it is not going to reduce the current tax liability. Why? Because currently we do not have income. The Quad Limited doesn't have any income. It's a loss, so there's no corporation tax liability. So either this 10,930 will be carried forward and it will be reducing the corporation tax liability of future accounting period, or this is like going to be demanded in the form of repayment from HMRC. We need to see that on 10,930, I mean, this is like going to act as a tax relief. So this amount is going to be repaid from HMRC to the company. Is this thing clear? Is this thing clear? As RDEC will be carrying two treatments. First treatment will be hitting our trading profit or loss figure, which is going to be done. But the other part in which the tax liability is going to be reduced, that shall either be carried forward or it is like going to result into a repayment of taxes. All right. Now, what is left as far as this requirement is concerned? I have calculated the adjusted loss figure for Quad Limited now, taking into account of these two explanations which are done before. And now we need to deal with the last of the requirement. I mean, this is the sub requirement of this whole main requirement. Explain how much of the Quad Limited's amended budgeted trading loss will be available for use by Porth Limited. Now, what the Porth Limited is, see, this is the requirement section, Exhibit 5. In the start of that, they had given us this picture that there's a company called Porth Limited, which is having 60% holding in Quad Limited. Okay, there is a kind of a group which is called 75% group, in which one company can be able to surrender their losses to other company. But for that purpose, the minimum shareholding has to be of 75% at least, which is not visible over here. As Porth Limited is having just 60% holding in Quad Limited, so these two companies are technically not a part of group relief group, so losses cannot be surrendered. Okay, there is one more structure is also to be taken into account, and that is called consortium. Okay, does anyone have an idea what a consortium is? I really want you people to write it down in the dialog box. And if you know that thing, then do you think that consortium relief is available in this regard? Do not forget that there is like another company as well in the question. Um, as there happens to be a planned ownership in the upcoming year where 60% of the holding is made by Porth Limited, but then either Mr. Berm's company BJB Limited will be having 30% more in the company's shareholding. So this is like going to be another shareholding acquisition to be made shortly in the upcoming year for the year ending 31st March 28. Though even having 30% holding, the company BJB Limited will not be making a group relief group with the Quad Limited. And if Mr. Berm will be like acquiring the shareholding, then individual shareholding is not something which is to be taken into account as far as the group structure is concerned. But even with company, if the company acquires holding in Quad Limited, 30% holding is so minimal that group relief group, I mean 75% group is not applicable. But now my question is, do you know there is like another thing which is called consortium relief? And if you know, please let me know as well. And is the consortium relief available in this regard or not? That is something which I want to know further. Okay, I have got an answer. Consortium relief is a form of relief that allows companies in a joint ownership structure to share losses even when no single company owns 75% of the other. Yes, that's perfect. So when there are two or more than two, so this is not about a single company group, two or more than two companies are having a shareholding in one company in such a way that each company will be having at least 5% holding, and each company will not be having more than 75% holding in the company, then they will be making a consortium provided the total shareholding by these two or more than two companies in the consortium company would be of at least 75%. What does that mean? If for instance, there are three holding and C company is having 15% holding in one single company, let's say whose name is Quad Limited, then each company's shareholding is at least 5. That's why all these companies in the consortium is 85%. So this is like making a consortium structure. And yes, if Porth Limited and BJB Limited, if Porth will be having 60% holding and BJB Limited will be having 30% holding in Quad Limited, then this would be making up a consortium structure. Why? Because every company, as in if I talk about Porth first, it does have a minimum shareholding of 5%, but not more than 75%. And then with BJB, the over 90%, I mean, the overall shareholding has to be of at least 75%, which is being met over here. So this is like totally possible. But then, as we can see that what the loss figure is, 970 Is that 33970 or 33470? Just reconfirm, recalculate it, because I just relied on your values. Just let me know if it is 33970 or 33470, because I think, yes, 33470. So this is the figure of loss, and only 60% of this loss 60% of this loss can be surrendered by Quad Limited to Porth Limited, as consortium consortium relief is like dependent upon the percentage a member is having in the company. So 60% of the loss can be surrendered. So 33470 into 60%, this much loss figure will then be surrendered. That's going to be equal to 20,082. Thank you. So 20,082. This is the amount of loss that can be surrendered. Let me just write it down as well. Okay. So again, this is like going to be a different thing. I think I'm of the opinion that I should put up another heading amount, right? And then what will I be saying? Is my voice now clear? Is my voice clear now? Okay. So I was like trying to say that um, loss relief under 75% group relief group is not available, for which I have made the discussion before, because for that the minimum shareholding of Porth Limited and Quad Limited had to be at least 75%. But consortium relief is available if 30% of the holding will be acquired by BJB Limited, and it is like a very highlighting feature, not by Mr. Berm, because if individual will be having a shareholding in the company, that will not be making a consortium structure. So there has to be a company having a shareholding in another company to make a group. And see, if, for instance, even BJB Limited is not going to have a shareholding in Quad Limited, then even consortium structure will not be existing, because consortium structure cannot be made with one company. As in Porth Limited alone will be having a shareholding in Quad Limited. No, then consortium structure will not be existing, but consortium structure may happen if, along with the Porth, there happens to be another shareholding acquired by BJB Limited, as each company will then be having at least 75% holding, while not having more than 75% by a single company, although the total, I mean, the combined shareholding has to be at least 75%. I mean, both PJB's holding and Porth Limited holding, when they are going to be combined, when they are going to be mixed, then it has to be at least 75%. So I must say that this is like something which is like already done. It is like, I'm just going to mention it over here just to show you that how things are to be written. The maximum amount of loss that can be surrendered to Porth Limited will be, it's like what we have done before, 33470 into 60% being the shareholding of the company of the member in the company, and that's equivalent to 20,082. You told me the calculation, so it's like this is the maximum amount of loss that can be given to Porth Limited to get it adjusted against their taxable total profits, right? So this is basically the answer. Okay, so well, just tell me, did it make sense to you people? Have you been able to grasp the concept? All right. Now, section A is done. And by going through this section A question, I have told you a lot of things, that how the formats are to be applied, to which extent we need to be careful while dealing with the ethics question. Though I'll be sharing with the ethics I'll be sharing with you people that very precious ethics document with you people as well, though it is like there on the study hub as well. But how the analysis is made, how we need to take into account the verbs given, how we remain skeptical about any condition or any act which may have an impact over the decision, and then by discussing professional acumen other than the tax, about those factors other than the tax in the question. Though in this question we did not have to deal with any such situation, but whensoever we find that there is anything which is to be taken into account, not just the tax implication, then it has to be mentioned. So this is like about the professional acumen skill. Now I am heading towards section B. Section B, as we know, has two questions, question number 2 and question number 3. Each question will be of 25 marks, out of which conceptually we'll have to deal with 20 marks question, while 5 marks will be awarded to that student who will be showing the answer in a prescribed manner while taking into account the professional skills. And with section B questions, with both of the section B questions, keep one thing in mind, that we will not be dealing with the communication style. I mean, no longer will be handling the drafting of notes. We will not be told to make memorandum. We will not be asked to, sorry, we will not be asked to draft an email. I mean, the communication skill is not going to be tested when it comes to section B questions. But yes, examiner will be asking for evaluation and analysis of the different alternatives when they are given. Then the commercial acumen skill will have to be applied if it is like applicable in the question. We need to discuss factors other than the tax factors, and we need to be skeptical wherever the things are not making the sense, where any other external factor might change the whole decision. So in case of section B, we'll be dealing with analysis and evaluation. Will be like projecting professional acumen skills and the skeptical skills, but the communication skills are not going to be tested as far as section B is concerned, right? Now, the background information is there in front of you, and then I'll open the exhibit. Okay, now you must have gone through the question completely. Now, with section B question, The requirement section is given separately. This is like a different feature when it comes to the comparison of section A and section B. Okay, so as far as the requirements are concerned, again, with every requirement, I'll be conscious about the verbs indicated because that many tasks shall have to be performed. Now, you should assume that today's date is 1st of May 2026. And on the assumption that Thomas prepares his first set of accounts to the 1st March 27, explain I don't know why it is not working. Okay, so there is like some problem with it. Otherwise, I prefer highlighting the word so that in the end, we will not be forgetting jotting down any important point. Now we need to explain with supporting calculations. The difference in the total amount of tax payable by him for the tax year 26-27 as a result of the profit on the sales of supporting memorabilia being treated as trading income rather than chargeable gains. And there is second sub requirement as well, where we need to explain briefly the payments that must be made by Thomas under self-assessment in respect of his trading income for the tax year 26-27, right? So here are the two things that we need to apply. And of course, we need to be now very vigilant that it is the single exhibit which is given and where the information related to this will be given. But let me just tell you the information about section B question is not haphazardly arranged. It's not like that one information will be found in the starting line of the question and the other information will be extracted from the last line of the question. They are somehow very closely placed to each other so that it is not going to confuse student on the day of exam. Okay, so if I treat that the sporting memorabilia that he has sold is trade, then the trading profit shall be calculated, and on trading profit we know the income tax liability shall have to be calculated. And being a self-employed person, I mean the person who is running his trade, of course he'll be liable to pay class 4 NIC as well. Now it does require a calculation, but the calculation is not going to be done on a very heavy scale. So I think if I open up the word processing document, I may make the explanations and the little bit of the calculation in respect of the income tax liability and the NIC class 4 can easily be made. But it is up to you. If you find that you are super comfortable doing the calculations on the spreadsheet, then this is something which I told you people yesterday, that you'll have to put the same heading on the word processing document and then on the spreadsheet, and then you'll have to link whatever is done on the spreadsheet on word processing document as well. Okay, so if I believe that he is his sales of sporting memorabilia is technically his trade, then each item will not be sold for more than 1,000 pounds. They did not precisely tell us that what is like going to be the selling price of each item and how many items are going to be sold, but it is like every item is gonna be sold for a price which is not more than 1,000 pound. In fact, the purchase price is even with it is like even within the controlled limits. It is not going to be crossing 1,000 pound. Both cost and sale are found to be less than 1,000 pound. But yes, the most important thing is that they have told us that their total income less expenditure, I mean, income less expenses, the profit figure is of 14,000 pound. And I believe this is the adjusted profit figure, because if it is like having any treatment, I mean, any such thing which is disallowed for tax purposes, then this must have been clearly disclosed in the question, but as no such information is given, so I believe that this 14,000 pound is like perfectly an adjusted figure. So what will I do again? I am going to copy the heading, copy the requirement, Control C, and I'm just going to turn it into the heading by removing unnecessary words or making like some adjustment. So this is like A1. So this is like the difference in the total amount of tax payable by him for the tax year 6-7 as a result of the profit on the sale of sporting memorabilia being treated as trading income rather than chargeable gains. So if treated as trading profit, this is the second subheading which I would like to make, but it is like totally up to you. Would you be like liking to make numerous subheadings or not? But if in case you find that things are like not very much closely related, then you may make as many headings as possible. Thomas will be liable to pay income tax on trading profits if the sale of sporting memorabilia is treated as their trade, and being a self-employed person, he will be liable to pay NIC class 4 as well. Okay, so what his income tax liability is, it's like his trading profit as quoted in the question is of 14,000 pound less. Obviously, this is the only income that he has in the tax year, less personal allowance 12570. And then the remaining amount will be taxed over a basic rate, because this is like quite clear that this amount will be falling in the basic rate band. So what's going to be the answer? Could you please let me know what the tax figure will be? That's, I believe, has to be 286 pounds. Could you please confirm? All right. So being a self-employed person, first 12570 will not be caught for any NIC. And the remaining amount after 12570, I mean from 12571 till 50,270, there happens to be an NIC of 6%. And then whatsoever the earning is found to be in excess of 50,270 pound, then we have to apply NIC class 4 at the rate of 2%. But see, this is just 14,000 pound. On first 12570, there is going to be no NIC, and on the remaining amount, he being a self-employed person shall be paying NIC class 4 at the rate of 6%, which is equivalent to 86 pounds. Right? So what is like going to be the total tax liability that he has to bear? Income tax figure is of 286 pounds, while NIC 4 figure is of 86 pounds. So altogether, the liability that he has to bear in this regard shall be of 372 pounds. Right? Thank you. And for instance, if the sale of sporting memorabilia is instead treated as a disposal of chargeable non-current asset, if it is like treated as capital disposals rather than the profit, then of course, when it is said that we are disposing of a capital asset, we have to calculate the capital gain on which CGT liability shall be due. And on CGT liability, of course, one will not be paying any NIC. Okay, so that would mean that I'll have to calculate the capital gains first and then the CGT liability. But the fact is that there will be no CGT liability. Why? As sporting memorabilia is a chattel, it is a movable chargeable asset, it is a movable non-current asset. And if it is a chattel, both of its disposal and cost, they are found to be less than 1,000. And the criteria is that if the cost and disposal both are found to be less than 6,000 pounds, then there is like no need to compute either the gain or nor the disposal, because that is like an exempt category. So it's a chattel having both disposal and cost not more than 6,000 pound. So it is treated as exempt disposal. Right? Okay, but there was like another information given in the exhibit as well, and that is the sporting memorabilia that he is selling, and we were like confusing whether it is to be treated as his trading profit or it is to be treated as his capital gains. He is also receiving a dividend figure of 500 pounds each year. But see, this is not going to be actually converting into any tax liability. Why? Because whensoever an individual will be receiving a dividend, though it is subject to income tax, but first 500 pounds will always be covered under the nil rate band. I think I have to mention this fact over here as well. And I'm just going to mention it at the point when the income tax liability was there is no tax on dividends, as it will be covered under nil rate band, right? Is this thing clear? Is this thing clear? Okay. So the first requirement is done. Now we are heading towards the second sub-requirement, where we need to explain briefly the payments that must be made by Thomas under self-assessment in respect of his trading income for the tax year 26-27. All right. So first of all, we had calculated the tax liability for 26-27 if the sale of sporting mem and for the same trading profit and for the same tax liability, in fact, they are now asking that what is going to be the schedule in which the payments on account shall have to be made. Now, the thing is, normally, generally, what will we do? The income tax liability is to be paid in 3 installments. The first installment is going to be due on 31st of January in the tax year, and then 31st of July after the tax year. And afterwards, the balance shall be due on 31st of January after the end of the tax year, while first two payments are based on the previous year's tax payable figure. See, this is the first year, as according to the information given in the exhibit, this is the first year of Thomas trading. He doesn't have any income in the previous year. He did not have uh, any income, in fact, any income tax liability previously. So technically, when we pick up what has happened in the previous year to be treated as an estimation on of whose 50% shall have to be due in the form of payments on account, considering we do not have any past data. So neither the first payment on account for the current tax year nor the second payment on account shall be due. And though they have asked about tax year 26 27, if I have to, if in case examiner would have asked that what is going to be the payments on account for the next tax year 27 28, see, for 27 28 we need to look back, which is 26 27, that what is like going to be their uh total tax payable figure, I mean income tax payable as well as NIC for which we have done the calculation. It is of, see, the total income tax figure and NIC figure together, it makes only £372. So even for the next tax year, Thomas will not be required to make either the first payment account or second payment account, because in the previous year, the total tax payable figure is found to be less than £1,000. And if that's the case, then payments on account can be avoided. But as far as the tax year 26 27 is concerned, we are absolutely not going to make any payments on account. Why? Because there is no tax data available for the previous tax year, as it is Thomas' first year of trading. So I'm just going to make another appropriate heading. And if I want to save my time, I am going to copy, Control C, and then going to paste it over here and turn this requirement into a heading later. So it's like the second requirement. So this is the payments that must be made by Thomas under self-assessment in respect of his trading income for the tax year 26 27. I'm just going to turn it into the bold letters just to make it like a little obvious, as obviously the heading has to be a little obvious either by underlining it or by converting into the bold letters. So as the tax year 26 27 is the first year of trade for Thomas, there is no tax liability in respect of previous tax year. So no payments on account will be required for the tax year 26 27. Right? Is this thing clear to each and every one of you? Now we are heading towards another requirement. It is requirement B1. We need to explain two matters which Thomas should consider when deciding whether or not it will be financially beneficial to voluntarily register for VAT. Again, I'm going to open the heading and I am going to take you to the point where the information related to VAT is given. All right. So let me just make you people understand this concept. See, we need to consider what is the VAT registration status of the suppliers of the Thomas, right? So whosoever is like selling the items to Thomas, are they registered or not? And if the sellers are registered, they must be charging VAT on their sales. And obviously, their sales is considered to be the purchases for the Thomas, and Thomas must be like bearing VAT over the selling price, over the price that he pay for his purchases. And if he is technically paying thing, because if he's not paying any VAT, how would he be able to recover? How would he be able to reclaim the amount of VAT paid? Because technically he has not paid anything, right? So on the other hand, the VAT system is customers. So whatsoever the Thomas sells to his customers, it is his sale and it is going to be a purchase for his customers. So if Thomas gets registered and he's going to charge VAT over the selling price of the product, if his customers are not registered for VAT, then whatever the selling price along with the VAT he is charging to their customers, that is like going to be taken as an additional burden for their customers because they themselves are not registered. So for them, whatever they are purchasing from the Thomas, the related VAT expense is like technically their liability, their expense. This is not recoverable. But if Thomas gets registered and he's charging VAT over the selling price of the product, and hence his overall selling price increases, and he's making sales to the customers, if their customers are also registered for VAT, then whatever the purchases they are making from Thomas, if even if it includes the VAT, it is not creating an issue. Why? Because they will then be able to reclaim the amount of VAT paid. So the status of their suppliers and the customer is like very important. Before that, Thomas would decide to register himself for VAT purposes on voluntary grounds. Right? Let me just show you the standard solution for this. As this requirement is carrying 6 marks and it does have two sub requirements. Both of them are like explanation oriented. So at least three or more than three valid points with respect to each requirement shall have to be made. Despite the fact they have said that explain two matters, but you try making three valid points. Two matters, but like splitting them in three valid points. That is like how you're going to show your answer. Okay, I was like going to show you the standard solution. That is it. Okay, so this is how they have put the heading first. So what do they need to check? The VAT status of his suppliers. If Thomas suppliers are VAT registered, Thomas will be charged VAT on his purchases, which will only be able to reclaimed if he is registered for VAT. And then you are going to make another point. However, if he purchases from non-registered business or members of the public, he will not suffer. He has not suffered any VAT. So even after becoming registered for VAT, he will not be able to recover anything. Then we have the third point. The VAT status of his customers, that's also important. If Thomas customers are registered for VAT, they will be able to reclaim the VAT charged by Thomas on the memorabilia. However, if they are not registered, the VAT will represent an additional cost to them, which may make Thomas' price uncompetitive, or Thomas will have to bear the burden of the VAT itself. Obviously, if Thomas gets registered and his customers are not, and by adding the VAT value into the selling price of his product, that is like going to create an escalation in the price, which might be like something not manageable by their customers. So either, he will then be having he'll be like he might be facing a risk of losing his customers, which could only be avoided if he's like going to reduce his profit margins and thus bearing the burden of VAT itself, or if in case he registers himself and is not going to make the prices competitive, then of course he would end up losing his customers. So it is to be done very wisely, that if registration would bring any sort of financial advantage to him or not, right? Okay, let me just tell you that there is like another sub requirement of this question as well, and this say that if Muhammad voluntarily just required from overseas, what is going to be the VAT implication, considering we assume that he is voluntarily registered for VAT? Is my voice now clear? Okay. So if I assume that he is now registered for VAT and he's like going to acquire a service not from UK but from a seller who is based overseas, then how the VAT shall have to be treated? Let me first copy the requirement and I'm just going to paste it over the word processing document. This is the requirement B2. Okay. And I'm going to convert the requirement into heading of purchasing advice from overseas supplier rather than using one based in UK. If Thomas gets registered for VAT, right? So if we keep the fact in mind that he's registered for VAT, then what is going to be the tax implication? This is like something which we now have to do. See, it is like going to be a business to business service providing consultancy, and Thomas is itself is in the business. So the provision of advice will be treated as B2B, business to business service. And it is gonna be treated as being supplied in the UK because that's dependent upon the location of the customer business. It is like dependent upon where the Thomas business is established. So it will be treated as supplied in UK according to where the Thomas business is established, right? And so if it is considered that it is the supply being made in UK, then VAT shall have to be charged on the service. But whatever the VAT is being charged, and that's also according to the standard rate, for Thomas, it is their purchases. So whatever the VAT they pay on the supplies being made to them, that is like repay, that is like recoverable from HMRC to them. So this will happen under reverse charge principle, where he will eventually be bearing no VAT cost. So Thomas will require first to pay VAT on the service at the rate of 20% under the reverse charge principle, and then reclaim the VAT on their expenses as how they recover VAT on their other expenses. So technically the VAT cost will be zero. First they pay on the services acquired, and then whatever the VAT you pay on purchases, that is recoverable when the return for VAT is being filed. So technically end result will be zero. I mean, it is like treated in the same way as how you are acquiring the service, as how you are making the expense from some local UK based supplier. So we may say that his VAT position is the same as if services have been purchased from UK supplier, right? So this is how I have tried producing at least 3 points, because B1 and B2, these two requirements were of altogether 6 marks, though in actual there could be a chance that 2 marks were associated with requirement B1 and 4 marks were associated with requirement B2. But obviously this is like something which we do not know as a student. You do not know at the point when, at the time when you are handling these two matters, then you will be like making an equal split. So for equal split, I assume 3 marks might have been associated with B1 and 3 marks shall have to be associated with B2. So at least 3 valid points for each of the matter needs to be discussed. Is this thing clear to each and every one of you? Is this thing clear? Students, is this thing clear? Now there is only one requirement left for this question, and this is of worth 7 marks. It says that explain the tax implications for INS for her intended sale of the Tevira Limited shares on 1st June 2026 and calculate her after tax proceeds from the sale. Okay, I'm going to show you the exhibit. this is basically the relevant information which you have to use for the sake of like calculating her after tax proceeds. And in the end, I will forget that what else is being required by my examiner. So the first thing is that I will have to explain. I just hope this time this highlighter starts working, but it's not. So first thing is that we need to explain the tax implication for Ines of her intended sale of Tevera shares, and then we have to calculate her after tax proceeds as well. And again, if you think that the margin of the calculation is not high, then you may produce the calculations on word processing documents. But otherwise, if you think that it is like requiring a little bit more of the calculations to be done, then it's better to do the calculations on spreadsheet, and then you'll be linking both on word processing document as well. Okay, let me first copy it. I have selected the line. Control C is the shortcut used for this purpose. And what will I be doing? I'm going to paste it over here. This is part C. First of all, we are going to discuss the tax implication for INS of a intended sale. And instead of like writing calculate because it's a command, calculation of her after tax proceeds from this sale. Though you may make short headings, you may make simple headings on your own, but it's like a way of saving time. And this is like something I'm stressing a lot, that securing your time in order to manage your paper timely is like a very important factor which one has to follow, right? Okay, I really want you people to let me know that what is like going to be the tax implication. It is requiring a simple uh, rule based information that I want to have from you, that what do you think that what will happen from tax point of view if shares in Tevera Limited are sold. Keep one thing in mind, he is a high rate taxpayer, and he's always been resident in UK, and he had already sold a painting for a gain of £86,000. But this is the information which is relevant to which is like related to the shares in Tevera Limited. So let me know that what do you think about the tax implication if shares in Tevera Limited are sold. Okay, I have got an answer from one student. I would really appreciate if all of you would try to contribute, even if it goes wrong. That's perfectly fine. Still, you have almost a month in your exam, and you may prepare well, even if whatever the statement you're going to provide to me is like correct or not. Though not exactly 1 month, but I mean, almost a month is still left, and it is like quite an ample time for the sake of doing the preparation. So try contributing into such activities, please. So, yes, uh, when shares will be sold in Tevera Limited on 1st of June 2026. See, this is the intended date of disposal of the shares. If this happens, Ines will and see Ines has owned these shares for a period of less than 3 years, which is why the chargeable gain shall have to be calculated. Had he kept the shares for at least 3 years after the date of subscribing for the shares, if he had owned the shares for at least three or more than 3 years, then of course, upon its disposal, chargeable gain tax or even the losses wouldn't have been taken. The chargeable gains figure shall not have been taken into account. So here the gains shall have to be calculated. Let me write it down first simultaneously. That as disposal is taking place on where Ines has kept the shares for less than 3 years. So chargeable gains so gain will be chargeable, and that is of what the gain figure will be, as the disposal figure is expected to be 95,000 pounds, while the shares were subscribed for 72,000 pounds. So the gain figure of 23,000 pounds shall be chargeable, right? See, 72,000 pound is the price that he paid for the sake of subscribing for the shares. It's to be treated as the purchase price. And the disposal figure is basically intended to be 95,000 pound, and that's how the chargeable gain figure will be of 23,000 pounds. The enterprise income tax relief, which he had obtained in the tax year when the subscription for the share was made, that will be withdrawn as well, because he had to keep the shares for at least a time period of 3 years for the relief to sustain, which is why the shares, as they've been sold on profit, the full amount of tax credit which he obtained earlier shall have to be repaid to HMRC. And yes, you have done the correct calculation, that is of 18,600 pounds, right? So I'm just going to write it down as well. Yes, the recording of both days will be provided to you people. In fact, the link will be shared on the YouTube. The EIS relief obtained at the time of subscribing for the shares will be withdrawn, as shares have not been for minimum period of 3 years, and the shares which were eligible for EIS relief, if they are sold for a loss, then the whole of the tax relief that we got at the point of subscribing for the shares will of the relief which is to be given back to HMRC will be reduced by the amount of loss. But as these shares have been sold for a profit, so whole of the tax relief which we got initially, which is in this case of 18,600 pounds, that will have to be given back to HMRC. So 18,600 will be repaid. Another important point is drafted. And one more thing, the sale of shares as you could see that they have resulted into a gain figure of 23,000 pound. But their disposal is also associated with one more thing. And what is that? Back on 4th of July 2023 for 196,000 pound. And the gain related to the disposal of painting back in the tax year 23-24 was 86,000 pound. But Ines used the proceeds which he generated from the disposal of the painting in order to subscribe for the shares in Tevera Limited, and now Tevera Limited shares are being sold. So this is like going to make the deferred gain chargeable right now. So the gain on the disposal of the painting was 86,000 pound, but it got deferred with respect to the acquisition of shares. Um, Under EIS scheme, this gain will be brought back into charge. But see, the maximum amount of gain that was, though the gain figure was of 86,000 pound, but we know that when we are going to have an EIS deferral relief, the maximum amount of the gain which is to be deferred was restricted up to the qualifying expenditure that is being made for the sake of acquiring qualifying shares, as he only used 72,000 pound from the disposal proceeds that he received from the sale of painting for the sake of subscribing shares in in Tevera Limited under EIS scheme. Then not the whole of the gain will have been deferred, rather only the amount that was used for the sake of making an acquisition. The gain up to this value will have been deferred, which is now going to be chargeable. Once again, I mean, out of 86,000 pounds, 72,000 pound got deferred, while the remaining 14,000 pound remained chargeable back in the tax year 23-24. But this 72,000 pound, which was initially deferred at the point of, because like having an acquisition in Tevera Limited shares under EIS scheme, so we had actually applied EIS deferral relief. This deferred relief has now been brought back into the charge. So this thing is to be kept in mind as well. The gain related to the prior disposal was deferred against the acquisition of shares in Tevera Limited under EIS scheme will be brought back to charge as a result of disposal of Tevera Limited shares, though the value of gain deferred was restricted up to the qualifying expenditure made in terms of acquisition of shares, right? Okay. So not just we had to tell the tax treatment, the tax implication in respect of the sale of the shares, because sale of the shares itself will result into the gain. The sale of the shares will result into the repayment of the income tax relief that we got initially. And it is like going to activate the gain which got deferred previously. But now here we need to do the calculation of her after tax proceeds from this sale as well. Again, I'm going to show you the exhibit and I'm going to give you 3 to 4 minutes, and I really want you people to let me know that what is going to be the CGT liability. And yes, there was a statement given to me before that this is like qualifying for BADR. You are right, this is eligible for BADR, but let me know that what the after tax proceeds figure will be. So your time starts now, and please everyone needs to take part into it. All right. So again, I've got only one answer, as the gain on the shares is 23,000 pound. Yes, it is something on which BADR shall apply, but the rate of BADR is now 14%, right? It is no longer 10%. The rate of BADR is now changed under Finance Act 25, and now the rate of 14% shall apply. And then the deferred gain of painting is obviously something which is not eligible for BADR. And back obviously got under CG the calculation. So, and if it is a little, if I find it is a little bit an overwhelming calculation, then I may use the spreadsheet simultaneously. Otherwise, if you're comfortable doing the calculation on the Word document, then that's fine. Okay, for instance, if I choose that spreadsheet is to be used for the sake of the other part of this same requirement, the heading needs to be same so that examiner may find easily that where the calculation is done. And now I'm going to paste this heading. I'm going to turn it into bold letters and see there are the gains qualifying for BADR, and there are also the gains not qualifying for BADR, right? So when it comes to the sale of shares in Tavera Limited, this is surely the gain which is qualifying for BADR, and the gain value as what we have calculated before, it is of 23,000 pound. And now the deferred gain of painting, which is chargeable right now in this tax year. Obviously, this is the gain related to the painting. It is itself not relevant to BADR. And the gain, as they told us, was of 72,000 pound, which got deferred in the past. Not the whole amount of the gain got deferred. So whatever the amount was actually deferred in the past, it is now becoming chargeable. So this is like going to be the overall gain. We need to deduct the current year losses, annual exemption, and brought forward losses, as we have two types of gains, the gains which are qualifying for BADR and the gains which are not qualifying for BADR. So we will preferably be adjusting our current year losses, brought forward losses, and annual exemption against those gains which are not qualifying for BADR first. So there are no current year losses or even the brought forward losses given in the question. Otherwise, if we have both types of gains, then the current year losses, the annual exemption, and the brought forward losses, because this is basically the hierarchy we use to be adjusted preferably against gains not qualifying for BADR. But here at least we have annual exemption to be deducted, which is of 3,000 pounds, right? And after that, what will happen? We will come across the taxable gain. The taxable gain is of 23,000 pounds, while in this case, the gains not qualifying for BADR, the taxable gain figure will be of 69,000 pounds. So this is how we have calculated the taxable gain figure on which we shall be calculating the tax liability. And whether the basic rate band is available or not, first of all, we will be applying the tax rates on those gains which are qualifying for BATR, and hence using the any available basic rate band. But see, INS is a high rate taxpayer, so his basic rate band is not actually existing. I am going to calculate the CGT liability first on the gains qualifying for BATR, 23,000 into 14%, that turns out to be 3,220. And then the remaining gains, which are of 69,000 pounds, they will be taxed in a normal way as he's a high rate taxpayer. So the high rate for CGT will be 24%, right? So this is how the total CGT liability, or you may also call it as CGT payable, that will be of 3,220 plus 16,560, that will be of 19,780, right? If you want to highlight it further, you may use the color as well. Do not over stress on coloring or like applying other beautification techniques, but just to make the things a little bit distinguishing, yes, you have to turn the things into bold letters, you will have to use the colors, though not much, but maybe with the final answer and all, this will not be consuming much time. Okay, so as we have calculated the CGT liability, do not forget that we have to figure out the after tax proceeds. I mean, how much of the proceeds, the cash will be left with INS once the disposal and the related liabilities are settled. See, right now in the current tax year, he is just going to sell his shares in Tevra Limited for a value of 95,000 pounds. So this is basically the proceeds. So this is basically the proceed. The proceed figure is of 95,000 pound. And because of disposal of shares in Tevra Limited, how much of the CGT liability on this disposal will he have to pay? This is of 19,780. Though it does include the CGT liability on the share disposal itself, and along with that, it does require the payment of the tax liability in respect of deferred gain on painting as well. So overall liability that he has to bear in this regard will be of 19,780. And there is like one more thing that he has to bear. Just because of the sale of shares in Tevra Limited, he will have to pay back the amount of income tax relief he once received in the year of subscribing for the shares, and that was of 18,600 pounds. This is something which he will have to give back to HMRC as well. So just because of the sale of the shares, whatever the liabilities, whatever the burdens he will have to bear, that they are all going to get deducted in order to see that how much of the proceeds are gonna be left behind once all such expenses have been taken into account, and that is of 56,620 pounds. So this is basically the value which is going to be left behind after taxes have been paid. Is this thing clear? All right. Okay, so there's a question. What if INS would have sold these shares after 3 years completed? So if 3 years got completed, then the gain of 23,000 pound wouldn't have to be taken into account. I mean, there is no tax to be paid on the disposal of the shares itself. But yes, the gain related to the painting which got deferred in the past will become activated, will become chargeable. And even then, the tax on painting shall be due. And of course, this 18,600 pound, which is the amount of tax relief he claimed in the year of subscribing for the shares, that would sustain. I mean, he did not have to repay it to HMRC. So only the painting would become chargeable for tax purposes, for CGT purposes. Now I'm quickly moving towards the last question. Question number 3, section B, obviously. Kindly read the background. I'm going to open the exhibit to show you the main question. Just like question number 2, question number 3 will be having only one exhibit while its requirements are given separately. Kindly read this important content of the question as well. You must have gone through the entire question. Now I am going to show you the requirements, which is given separately, and we shall try to discuss these implications a little quickly. Okay, so it says that you should assume that today's date is 1st of March 27 and explain the inheritance tax implications of the gift of the cottage to Pedro at the time the gift was made and as a result of Marina's death. And this part of the question is carrying 5 marks. Okay, let me just show you the exhibit again, as you will have to find the information yourself. But as what I've told you people before, that the information is not given in a haphazard way. You may easily find where the relevant detail is given. So first of all, as I have to discuss the inheritance tax treatment on the gift of holiday cottage to Pedro. See, it is being transferred to an individual in the lifetime, so it is classified as PET, a potentially exempt transfer, and which is why there's going to be no IHT in the lifetime of Marina. But if Marina dies in 7 years, I mean, the donor dies within 7 years of making the transfer, then the gross chargeable amount of this gift will become chargeable at the point of her death, against which we need to first adjust NRB. And we know that NRB needs an adjustment for the chargeable transfers made in the last 7 years. And whatever the NRB is left behind, that is going to get adjusted. And whatever the value is going to be left behind, that's called taxable value on which death IHT on lifetime transfer shall have to be calculated. There's a question, is it just an explanation and no calculation is being required? See, they are asking to explain the implication. It could be done, then that's perfectly fine. But let me just tell you that as long as this question is concerned, one, no, no such information is given. So the whole of the NRB is available. But there is a very important thing that needs to be covered over here, and that is the gift with reservation act. See, this is the legally transferred the ownership of. We really need to see that death of Is my voice clear? Can you hear my voice now? See, as the donor and the donee are going to mutually take the benefit out of this cottage, so this will be like falling under the concept which is called gift with reservation. And here, one thing is like very important, that by the time donor dies, has the reservation been lifted or not? Because if the reservation has not been lifted, then instead of like being treated it as a lifetime transfer, we shall also take it account as a part of our death estate, and whatsoever the tax liability comes out to be on the higher side, that shall have to be paid. So after giving away this cottage, Marina died after 7 years, and the reservation was not lifted before her death, which is why, if I consider it from the perspective of lifetime IHT, in the lifetime it was paid, it was exempt, and she died after 7 years. So, under lifetime implication, the IHT was zero. But considering the reservation was not lifted by the time she died, so in it shall still be included as a part of her death estate computation, and IHT according to death estate shall have to be paid to HMRC, right? So, see, if something has to be treated as a part of death estate computation, then market value at the date of death shall have to be taken into account. And what the market value at the date of death will be, as in the passage given above, it says that Pedro had inherited a portfolio of UK unfurnished properties, which are of £670,000 in total, right? So this value is definitely more than £325,000, and no prior transfers before the date of gift with respect to Marina are given, which is why the value of a death estate, which is found to be in excess of £325,000, will be taxed. And we know that IHT on death estate is to be paid at the rate of 40%. But see, as they did require only the explanation, if you have a time, you may give a little bit of the calculation, but it is not required because they have strictly emphasized on explaining the scenario. Let me just take you to the point where standard solution is given, so that you may come to know that how the things are to be written. See, this part of the question was carrying 5 marks, so we had to at least make 5 valid points. I prefer drafting the response in the form of smaller paragraphs. So the first paragraph would be that the gift of the holiday cottage was a potentially exempt transfer, and that's how there's going to be no tax in the lifetime. Then second one would be that though she died after 7 years of making the gift, but IHT will be payable because it will be falling under gift with reservation rules, and that's mainly because she continued to live in the same property without paying the rent. So that makes up the second point. You may shorten the statements, right? Instead of like making the longer statements, if you can convey your message properly by making short statements, that's fine. And then the third statement would be that the reservation was not lifted before her death. So IHT payable would be calculated by first treating it as a lifetime transfer and then comparing that what is IHT going to be if it is like treated as a part of death estate computation. Of course, she died in after 7 years of making the transfer, so lifetime transfers bearing no tax, but definitely there has to be some of the tax due in case of death estate, and which is why the IHT on death estate will be found higher than the lifetime IHT, so that shall be paid. And the value of estate has exceeded £325,000, as the value of estate is of 670,000 pound, and the excess value will be taxed at the rate of 40%. And then the last point would be the IHT attributable to the cottage being gifted with reservation was payable by the recipient, obviously, because donor is Marina is dead. So on death estate computation, of course, the residue legatee shall have to bear the taxes, which is only single person being suggested in this question, and that is Pedro. Is this thing clear to each and every one of you? Now we are having another requirement B, where we need to explain with supporting calculations the amount subject to income tax in the tax year 27-28 as a result of Pedro letting the cottage. So if he lets the cottage out in the tax year 27-28, then what is going to be the tax liability? Okay, let's go to the exhibit once again. They have given us a data about his property income. Sees the Pedro is gonna be taxed on the rent received during the year, because in case of individuals, we do have a cash basis as well as accrual basis for the sake of computing the rental income and paying off the income taxes on it. But if no specific way of treating rental income, calculating rental income is discussed, then by default for individuals, we shall pick up the cash basis. Though in case of companies, there is no cash basis, there's only one base, and that is accruals base. And C, they are talking about the expense paid to letting agent. It is deductible. They are talking about initial repairs which were done before the property was let out to make it suitable for tenancy. This is like a capital expense. This is an asset expense over the building. Though in case of cash, under cash basis, we deduct all types of expenses, whether they are of capital in nature or they are of revenue in nature. But still, if the asset expenditure, the capital expenditure is like related to either land, building, or car, then this is like not treatable. So initial repairs are basically capital expenses and they are linked to the building, which is why they are not allowed to be deducted. And the last is they are also talking about the short lease, as the property is leased for a period of less than 50 years. So a certain portion of the premium is going to be assessed only in the tax year in which the premium is received. So let's do the calculation as well. But this explanation should be given as well, as if you have a look at the requirement, we need to explain and giving it a supporting calculation. Okay, one thing which I want to discuss with you people right now, there is one more way of like making your calculations a little bit more expressive, more distinguishing. I'm just going to the previous question of Thomas and Ionis. Do you remember that in the requirement C, we had to explain and doing the calculation, made the explanation on wordsheet, word processing document, and the calculation was done. I think is like very important. Though for your ease, the descriptive part of the question was done on the word processing document and calculation was done on the spreadsheet. And we tried making the same heading on both documents. But another thing which I find very important, as on the spreadsheet you have figured out the answer, it is 56620. What if you are going to mention it on the Word document just to make it a complete piece of information? So if I say that the after tax proceeds will be what the value is 56620. So, and if mentioned that refer to spreadsheet for calculation, then your examiner will never forget looking at the spreadsheet in order to check that how you have actually performed this calculation, right? So though the calculative part of that question was done on the spreadsheet, but the final answer must be quoted on the spreadsheet just to make this document more comprehensive. And now, as we are dealing with question number 3, in case of Pedro, as I'm going through the second requirement here, again, the explanation with supporting calculations is required. And if the calculation is short, it could be done on the Word document as what I've discussed before. But I think it is like going to be a little bit lengthy calculation. Then what if I'll be doing the descriptive part on the Word document and calculative part on the spreadsheet, and the spreadsheet answer will then be mentioned at least on the Word document just to make the document look more comprehensive, right? So what will I be doing? I'm just going to copy the requirement. I may make heading on my own. This is something I'm telling like hundredth for hundredth time. So I'm just going to remove those words which are basically pinpointing towards a certain task. Rather, the task itself is to be presented in the form of heading the amount subject to income tax in 7-8 as a result of Pedro letting the cottage. Okay, so first of all, I had to give the explanations. The amount of rent received is taxable in the tax year 27-28. The amount paid to letting agent is allowable for deduction purposes, or you may simply call it as tax deductible, while initial repairs are done on building to make it suitable for use for the first time. Hence, it's a capital expense, though when you are applying the cash basis, capital expenditures are even deductible, but not the expense which is either related to land, building, or car. So the thing is, this is like an expense related to capital expenditure, which is why it is not deductible, right? And then they're talking about the premium as well. A portion of premium received will be taxable only in the year of receipt, right? So I'll be doing the calculation, and as what this is something which I feel that the calculation is a little bit exhaustive, so I may use the spreadsheet. So one requirement, some portion of one requirement is going to be done on the Word document, and the other side related to calculation will be done on the spreadsheet. I'm going to copy the heading, use opening the spreadsheet, and I'm just going to paste it over here. And going to turn it into the bold letters. Okay, so we are talking about the tax year 27-28. How much of the rent is received according to the information given according to the exhibit? The rental figure is of 400 pounds. And as the property got let out on 1st of July 27, so technically it is let for just 10 months. We must have received rental figure for only 10 months. As for every month the rent is received, so this is like, this must be about 10 months rental figure being received. So it's like 400 into 10. The rental figure is of 4,000 pounds, and then we need to consider the premium assessable figure, as the premium has also been received in the tax year, but not the original amount of premium, but the premium assessable, which I will figure out with the help of formula, that will be assessed, but only in this year, the year in which premium has been received. Okay. So how much of the premium we have received according to the exhibit? The premium that we received is of 12,000 pound, and the property is being let for a period of 5 years, right? So I shall be applying a formula which is P minus P, the premium, into N minus 1, which is 5 minus 1 into 2%. So this is how the formula is taken into account. The value of premium assessable is just of 11,040 pounds. And as they said that the amount paid to letting agent is also deductible. To letting agent, how much of the fee we have paid? This is like 15% of the rental figure. This is something which is mentioned in the exhibit, that a fee of 15% was paid to the letting agent. So this is like a revenue expense, it is deductible. Though I am reiterating on this fact again and again, that whether it's a capital expense or a revenue expense, they both are deductible if company chooses, if individual chooses for cash basis. In fact, cash basis is the by default basis, but yes, three types of capital expenses are not to be taken into account. That is the capital expense related to land, building, and car. So 15% as it is going to be deductible. So I'm going to put a sign of minus before that, is equal to minus 15% of 4,000. The gross rental figure for the year, it's 600. So now I will be able to come to know what the property income for the tax year 27-28 will be. That's going to be of 14,440 pounds. And now what will I be doing? I'll be mentioning the final answer on the Word document as well, just to make my Word document on which this whole calculation, this whole thing with the explanation is being carried out, will then become complete as well. So the property income for the tax year 27-28 will be 14,440 pounds. And I'll mention that refer to spreadsheet for calculation, right? So this is how this makes my presentation more appropriate. Is this thing clear to each and every one of you? All right. Now, quickly moving towards, okay, show the formula for premium. See, we do have another formula as well, but the formula that I have applied over here is premium minus premium into n minus 1 into 2%, where P stands for premium. It is of £12,000. Again, P stands for premium, 12,000 into n being the number of years for which property has been leased out, minus 1 into 2%. So that will give you a premium assessable figure, which is in this regard of £11,040. Otherwise, we do have one more formula as well, 51 minus D over 50. It is like 51 minus D stands for duration, replacement of N basically, 5 over 50 into P, the premium. The premium figure is of £12,000, and that is like going to give you the same answer of £11,040. Right? Okay, so quickly moving towards the last requirement of the same question. Here it's of 10 marks, and it is saying that calculate the reduction in Pedro's income tax liability for the tax year 26-27 as a result of making the planned contribution of £85,000 gross into his personal pension scheme on 31st of March 27. Your answer should include an explanation. So see, again, the explanation and calculation both are required. If you find that the margin of calculation is like a quite overwhelming, it is huge, then you'll be using description. The description is to be done on the Word document, while calculation will have to be carried out on the spreadsheet, and then you'll be linking in the end the final answer from the spreadsheet to be pasted on Word document as well. Your answer should include an explanation of the amount of the personal allowance available to Pedro in this case. All right. Now, I'm going to open the exhibit to show you that where this information is given. Here is the information related to personal pension, and keep one thing in mind that Pedro is a higher rate taxpayer considering the volume of salary that he is receiving on annual basis. Just because the time is short, so I'll be straight away taking you to the solution side. So see, according to the information given over here, what Pedro's salary is, it is of 89,000 pounds, so 89,500 pounds, 89,500